So recently I worked with a client, and it took probably 3 or 4 phone calls of us doing strategy sessions together to understand exactly how they qualified for the employee retention credit. And so they're actually in financial services. And the challenge with financial services is that financial services were broadly exempt from any shutdowns, any modifications. I mean, if there's a business that's essential, it's hard to think of a business or an industry that's more essential than financial services. And in fact, actually, they're an escrow company. And so the escrow company, what happened was that they've actually seen business boom in the past few months, right? I mean, as we all know, there's a housing, there's just the housing market's hot, right? There's a lot of housing transactions being done. So, demand for escrow services has gone way up. But they've still had to significantly modify the way they do their business. And so we looked at a few different things together. We looked at the modifications in their business, and frankly, a lot of them didn't necessarily qualify because, well, they were able to move to a remote scenario, and so if you were able to work remotely, and you're essential, then you wouldn't qualify. But we kept digging deep, and ultimately, what we found was that a significant part of their business, in fact, as IRS would define it, a more than nominal part of their business is dependent upon in-person interaction with real estate agents. In fact, they have an entire division in their business that's dedicated to in-person marketing and in-person transactions. And what we found was that because of the restrictions in their state, they were unable to attend these in-person events. And these in-person events had more than a nominal impact on their business. It wasn't just 1 or 2, 3% of their revenues. It was a substantial part of their business, and so we quantified that. In fact, the IRS puts a threshold on more than nominal of 10%, and so more than 10% of their business was partially shut down in compliance with California mandates limiting non-essential visitors and limiting non-essential parts of the business. And so with that in hand, we drafted a narrative report documenting it, putting hard numbers and hard facts to this narrative report, and we were able to qualify the client for literally hundreds of thousands of dollars of tax credits. So it's not always easy. It's not always immediately obvious, but if you spend the time to understand the business, to understand how compliance with state and local mandates did affect your business, there's potentially large money there. So if you'd like to know more about the ERC, give me a shout. Love to walk through it. With this client, in escrow, we spent multiple phone calls together. Identifying, okay, how could we possibly do it? And it didn't cost them a dime. There's no cost for us to brainstorm and strategize and whatnot. In fact, we only charge a fee once we actually file for you. So we do all the work up front because we want to be able to help. If we can't help, we don't feel like you should have to pay us a single penny. So if you'd like to have the conversation, give me a shout. 15 minutes. If I don't think I can help you, I'll be direct. There's multiple folks who we go through it and we look at it and it's like, man, any way you slice this, sorry, it's just not going to work. But if we think there's something there, we'll dive in and we'll do some work up front and see what we see. So shoot me a note. Love to talk.